Sunday, September 8th, 11:10 a.m. New York time. Good morning. Welcome to Winning Wall Street's Money. Show you some insight of a pending event from the United States Central Bank, also referred to as the Federal Reserve. Directly from their website, their official website, there's an event pending. It's the event. When they have a meeting, at that meeting, they vote. The board members, not the judicial system, not the legislative system, not the executive branch, or you and I. It's the board members that will vote. Wednesday, September 18th, 2 p.m., they will release the information. They were either leave the interest rates alone or change them. That's what's going to happen. Now you know several days ahead. You might be asking, what's the meaning of the federal funds rate? Okay, the federal funds rate is the interest rate that banks charge each other to borrow or lend excess reserves overnight. Law requires that these banks must have a minimum reserve level in proportion to their deposits. Not every bank participates. Only certain ones meet the requirements. And sometimes those banks get taken out and new ones get replaced, depending if they maintain the requirements. And this affects mostly the fixed income and the adjustable rates, ones that participate. Give you an example. You have the U.S. Treasury Department that has bonds, notes, T-bills, different durations of fixed income products. Then you have the private sector that can set any interest rate they want. And they are based it on other assets of where they're going to add it to. Maybe an auto loan, a mortgage loan, personal loan. Got it? So there's a difference on the yields, interest rates. Point is, I'm going to show you in the futures market what has been happening with yields. If you're not familiar with yields reflects the interest rates. Again, there's different durations of interest rates. So if you're going to be investing in fixed income products, money market, CDs, bonds, notes, yields, T-bills, they have different durations when they expire. And then there's a private sector one. Example, Disney, Verizon, they have fixed income products besides just their stocks they offer. And some of those companies, another example, maybe you buy a 5-year bond or 3-year bond from Walmart. Maybe they're offering 9%, but in the policy, it may be one that has it where they can recall it anytime they want. So you might have bought that 5-year bond the first year, and within 18 months, they take it away from you. And if you want to buy a new one, they offer it at the lower rate of 6%. Yep. So again, do your due diligence of understanding the financial products you're considering or that you're in now. Remember, your financial advisor, that's not their job. Their job is to keep your money as long as possible, make income off your money for their own personal wealth. That's a fact. We're looking at the U.S. Treasury 30-year yield, and we're looking here at a 20-year chart monthly. So since we're in the month of September, just the first week, we made a new low for the year. That's a 30-year yield. You could buy a 30-year bond from the U.S. Treasury Department, or you pay more money and go to a broker and pay for it, which would be silly, but some people do that for their own reasons. Well, you would have collected more money on your investment last year. Now, if you buy them, you're earning less income. Why would you want to buy it now? If you think inflation is going to continue going higher, why would you want to earn less money where you could have done it months ago? That's on a 30-year. 10-year yield. We already took out the low of last month, a new low for the year. And the 10-year is very common, very popular. Now we're looking at the 5-year yield. Took out the low of last month, new low for the year. And we're looking at the 2-year yield. Same thing, took out the low of last month, new low for the year. I just showed with you the major fixed income US treasuries that are purchased. They all made new lows for the year, taking out the low of last month. Again, this is separate from what the Federal Reserve does. So even if the Federal Reserve, which they have not changed the interest rates this year, they have not, they left them unchanged, but you still see these yields have been declining. I'll say it again. If you're purchasing these now, you're collecting less money, earning less money than you could at the beginning of this year and the high of last year. You go ahead and continue purchasing these if you want. I'll focus on something better. Now let's go look at your stock market. The major stock indexes that you could buy in the stock market directly on your own, wholesale, or you go through a broker and buy theirs where they're going to charge you a fee. And you have your hard-earned money paying someone else. There's people who do that. I think it's silly. But you go ahead and continue doing that. Looking at a 20-year chart, the S&P 500. For the current month, we're still inside the range. We haven't taken out the high or low of last month yet. But we are at all-time high for the past 20 years. Stock market is a bull. Now we're looking at the NASDAQ 100. Also, it's still inside the range of last month. Again, this year, all-time high. The Dow Jones Industrial Average, also currently for the month, inside. We haven't taken out the high or low last month, and look at that, past 20 years, all-time high. So these are the three major financial stock indexes, the big companies, and you see they all have been making new highs for the year. Good investment if you've been buying these on the dip, these stock indexes, making more money than on the fixed incomes. Now we're going to look at the Dow Jones Transport Average, inside candle for the month. Hasn't taken out the high or low last month, nor is it at the all-time high. Dow Utilities, look at that, made a new high for the year, broke out the high of last year. It's not at the all-time high right there. Give some insight. The Dow Jones Utility Average, the companies in this index pay high dividends. So you have two things you could earn income here, making money on a dividend. And if the stock goes higher from your purchase, you make money. These are considered defensive stocks. So you have the fixed income product, the yield's going lower versus Dow Jones Utilities going higher and pay high dividends. It's pretty simple. That money is rotating into fixed income products or assets, let's say stock assets that pay dividends. They're rotating here. They've been rotating here for a while compared to the fixed income products, your bonds, notes. Now look at the Russell 2000 inside candle for the month. Yep. These indexes have many companies inside them. Well, NASDAQ 100 here, the Dow Jones Industrial Average here, the Dow Transports here, and the Dow Jones Utilities here, and the S&P 100, which I don't have here showing because I wanted to show the Russell 2000. Russell 2000, not including this one, NASDAQ 100, Dow Jones Industrial Average, Dow Transports, Dow Utilities, and the S&P 100 are part of the S&P 500 index. Got it? So if you buy the S&P 500 index, it represents these other indexes. The S&P 500 index is also broken up to 11 sectors. And those 11 sectors have stock ETFs you could buy on your own, or you could pay overprice, give away some of your money to your financial advisors. Why would you want to do that? So let's look at the 11 sectors in the S&P 500 and see how they're performing for the year. Remember, the major three stock indexes I just showed you, Did not take out the high or low last month. But the major three stock indexes I showed you, S&P 500, NASDAQ 100, and Dow Jones, all this year have made new highs. So we're looking here, the largest weighted average in the S&P 500, which is technology, XLK. Yep, inside candle for the month. But again, new high for the year, for the past 20. XLV, healthcare, made a new high for the year. Outstanding. It's performing better than all the other assets I just showed you, other than utilities. Yeah. Healthcare, XLV, new high for the year. So if you understand this is a stock ETF of healthcare companies, maybe there's companies inside this that are performing better or worse than the stock ETF. But again, you can simply do the stock ETF instead of worrying about those individual companies to look over. But it's a choice you can make. Next sector, financials, XOF, new high for the year. Amazing. So again, we're seeing several sectors that are outperforming the stock indexes. Consumer discretionary, XLY. It did take out the high of last month. Still below the high of the year. Communication services, still inside the candle. Hasn't taken out the high or low last month. Industrial, XLI. Yep, inside candle still. Hasn't taken out the high or low last month. Consumer staple, new high for the year, new all-time high. Outstanding leadership. What I'm showing you is what most financial analysts, advisors, media stations choose not to share with you. So you're going to be more in the know from just what I'm showing you. Energy, XLE, inside candle. Utilities, XLU, new high for the year, still hasn't taken out that high. Real estate, XLRE, new high for the year, took out the high of last month, outstanding. Nice run up. Materials, XLB, inside candle for the month. Thank you for taking the time to watch this video. Hope you got some good information from here and put it to good use. That's it for the video. Thanks for watching.